I want to start by asking you a question. And this is a group effort. And the question is, what are the 7 components of quality? Somebody just shout one out. I can't hear. Oh, I can't hear. Who's got one? Edgar File Manual Rules, number 1. XBRL Spec 2.1. I hear GAAP Taxonomy 3. Accounting Disclosures 4. FASB's Implementation Guidance 5. SEC Staff Observations and their FAQs is 6. I think I heard it. What? Not the staff observation. 2.1. Not, well, I got 2.1. So I heard it. Just yeah, the XBRL US Data Quality Committee has some stuff coming out. And that's what actually I will talk about, so it's probably appropriate that that was a hard one to get. Anyway, keep those 7 in mind. They're key. So, common errors, I'm going to hit some of these, but I'm going to back up to show you that on this list of these 7, we're going to talk in a slice this way on certain errors, like calculations. We'll talk about calcs because they go that way. The Edgar File Manual has calc rules, the observations, the FASB implementation, all those have calculation things going on. So if I talk this way across, like let's talk about the Edgar File Manual, you'd all be sleeping in 10 minutes. So we're not doing that. We're slicing the other direction. And the first slice we're going to take is going to be decimal settings, which very commonly are wrong, and you may not notice in your review. And what I'm talking about is the rule says the value of the decimal attribute of a fact must correspond to the accuracy of the same amount reported in the HTML. Makes sense. They should have the same accuracy. So the only way to do this is with examples. A federal tax rate of exactly 46%, if that's the disclosure, what value would be entered into the XBRL? In this case, 0.46 is the answer. That's how we enter that. And the decimal attribute means how precise is that. In this case, it's infinity because 0.46000000 is really what that means. We just enter 0.46 and we give it a decimal attribute of INF. If you're in the XBRL daily, you may know that, otherwise you wouldn't. But here's another one, a management fee of exactly 10 basis points. So what value would be entered? That's 1/10 of 1%, so 0.001. And then the decimal attribute, again, it's exactly so INF. This one's rounded. So profit margin of 9.3%. How would you enter that as a value in XBRL? Yep, 0.093. And here's the question of the decimal attribute. The answer is, it's 3 places to the right of that decimal point we know it's accurate to. Maybe it's 0.09311, whatever, but 3 is what we enter in the XBRL to tell the reader that it's accurate to that length. If we were going the other direction, it would be a -3. So let's do a different one. It says 100 on the face of the HTML, and up above it says in thousands. So how would you enter that? It'd be 1,000, 1 with 5 zeros. And here's the key question. The decimal attribute is, now it's exactly 100, and then we don't know what the next 3 are because it's in thousands, so it's actually a -3. Better example would be, what if it said 123 on the HTML and there was in thousands, then it would be -3 as well. Inventory of 100.2, that's what it says on the HTML, but it says up above in thousands. So the way to enter that would be 100200, that's what the number really is, to the extent we know the rounding. And then Somebody said it, -2 is correct. So it's accurate 2 places from where that decimal point would be. So this is something that hopefully whoever's doing your XBRL knows. It is something that has a lot of errors occurring, and the SEC has noticed this. These aren't as egregious as some of the errors we'll talk about, but then again, they happen. Understanding dimensions is another category of errors that occurs, and some of you know what dimensions are, some do not, so I'm going to take the next minute to get everybody up to speed on dimensions, because these are egregious errors that are occurring. And this is how XBRL is structured. So what I've got here is a segment disclosure, and if I want to tag assets for the 3 segments, which is 3 different numbers, without dimensions, you'd have to make an extension or a unique tag for each one of those numbers. Assets segment A would be the extension, assets segment B would be the second one, and so forth. That's painful, and nobody wants that many extensions in their XBRL. So dimensions came about to say, let's set up this structure, and to tag assets for segment A, we'll use that tag assets, and then we'll hook to it and join to it the segment A member. It's kind of a tag. Those 2 together will tell me that that's assets for segment A. It's beautiful because then you don't have an extension of that line item. And you can continue on doing that type of thing with the revenues and so forth. So that's what dimensions are. I do want to say those are some of these are abstract elements, as you can see by that bracket. You cannot tag a number directly to those. You have to tag the number to the line item elements, which are the 2 below. You can use the ones up above as adjectives to the noun, so to speak, but that's how dimensions works. Okay, so if I open the closet to the door to my closet, there'd be a bunch of shoes at the bottom, and what if I want to organize those shoes? I could use a dimensional structure to categorize them and tell you something about that, because mine are a mess at the bottom of my closet. But I could do them by color. I could classify them by color. I could also classify them by gender. I could classify them by type of shoe. So 3 different categories. Maybe I want to know what certain color, male, and boot is. The way that structure would look in XBRL, if you did a dimensional structure, for the gender, I'd create a gender axis, meaning I'm going to split this by gender, and I'd have 2 members. For the color, I'd keep going with this structure and have a color axis with only colors on there, and then lastly, style. Sandals, sneakers, and boots. Okay, now I'm done with explaining dimensions, but that's how it works. And if you have a color axis, there better be nothing on there other than colors, and that's a problem in filings, which I'll show you in a moment. But what are the common issues with these dimensional structures? Invalid axis and member combinations are really causing a lot of problems. I think if there's a Dear CFO letter coming out next, likely to be this one. It's high on the list. And what do I mean by that? Well, that was one. The second one is different meaning in the XBRL versus traditional financials because you goofed up the dimensions. A third problem is the inappropriate axis extensions, and that's what the SEC put out in that observation. I'm going to hit each one of these 3. The invalid axis member combinations. The rule, general rule, is that member elements included under a given axis should be appropriate for that axis element. In other words, what should be on the colors axis? Colors, like red, green, yellow. Nothing else. Sounds very simple, but why is that a problem? Well, there's a large number of members and axes combinations that don't make financial sense. The legal entity axis, here's an example, is probably the biggest violator of that axis member situation. Let's say you set this up to tag your chemicals segment. Well, chemical segment is wrong on the legal entity axis because the chemical segment is not a legal entity. Simple. Red should be on the colors axis, not other non-colors. So that legal entity axis should only include actual legal entities or groups of legal entities. A good thing to go back to your company is check all the times you use the legal entity axis and see if it's really a legal entity. I'm sure there's people in this room where it isn't. Here's another, let's go legal entity axis. I see the restatement adjustment because it's a restatement for a legal entity, but no, that restatement is not appropriate. It's not a legal entity. Here's another one, parent member. Well, fortunately, we have one that kind of works. The parent is the legal entity of this company. However, that isn't right, even though it looks very right. And this is where a problem comes in, because that parent member is for the portion of equity that relates to the parent. It's not the parent company. There is a parent company member, which looks very similar, but the parent company is the right one, and that is a legal entity. And this one is appropriate. I'm not going to put a red line through that parent company. This is correct. The parent company member is proper on this axis since it represents that standalone holding company. So you can see how, make sure the colors on the color axis are colors and nothing else. This is where it becomes a little dicey and problems occur. Good guidance is that member elements on a given axis should be appropriate for that axis based on the labels and definitions. So all these axes and members do have definitions. Read them, they will make sense and should work. And then another good piece of advice is follow the US GAAP taxonomy as much as possible. Those X member combinations in US GAAP taxonomy are very good guidelines, and sticking to them is a very safe way to go. Sometimes it requires going off the board and doing your own thing, and that works, but that's when errors start popping up with these. So axis member combinations, very key. A lot of companies I talk to, what do you mean axes? I know the tag that I pick, and I know the member I'm hooking to it, but tell me more about what an axis is. Simply because they don't have the visibility into their XBRL for which axes they're using. These axes they give a lot of meaning to the XBRL. So if you or the person working on your XBRL doesn't know what the axis is or which axis they're using, think again. Figure out a way to be able to see those and understand those. Any questions throughout, just raise your hand. I'm glad to stop and dive in a little more. So that's one of the three dimensional common errors. A second one is different meaning in the XBRL versus traditional financials. So sometimes you're tagging things and you think you tagged it up right, but you're really telling the user something different. The best way to show this is an example. Okay, at December 31st, ABC Company's accounts receivable included $500 million due from XYZ. So this is a receivable on ABC's books. The way this was tagged erroneously told the reader that XYZ Company had accounts receivable based on a balance of $500 million on its books at December 31st. Okay, so that's definitely the wrong message that was meant to be sent. The question is, whose books is this receivable sitting on is key. How did this happen? This is a common error, okay? I'm not showing you one-offs. I'm not showing you things that don't apply to people in this room. In this case, the company did pick the right line item. Receivables net current, that is the right line item for that 500. We're trying to tag the 500 million. What they did is they said, let's put that on the legal entity axis because XYZ is a legal entity. That's who the receivables from. Well, when you use the legal entity axis, and this is key to everybody here, is what that means is we're now talking about a fact that's not on our books. This fact is not even a fact of our company, which sometimes in the financial reports you do talk about a number that is somebody else's receivables or sales. We acquired this company and they had sales of X. That's a time to use a legal entity axis to explain that that number is on the books of somebody else. This is something that's not really written anywhere and it's not in the taxonomy. It's just something you got to know, is that a legal entity axis means we're talking about somebody else here. So in this case, by using that, I would read this to say receivables of the legal entity XYZ were 500 million. And that's not what we're trying to say in that original disclosure. So in this case, let's get rid of the legal entity axis. That was a mistake. And replace it with the customer access. So now I'm talking about the books of ABC Company, which I want to talk about, and really XBRL would read this as 500 million is the receivable on the books of ABC. for the customer XYZ. And that is what they wanted to say. So this is an example where the way you tag it gives a different meaning to the XBRL than what you wanted in the HTML. So again, that access element is essential item that gives meaning to the disclosure in the XBRL financial statements. Very key to know what access is being used where. Here's another one that applies to everybody in the room and is very much too common. The traditional financials said at June 31st, the company had a loss contingency of $40 million related to asbestos litigation and a loss contingency of $100 million related to patent litigation. Easy enough. So the company erroneously gave this meaning in their XBRL. At June 30th, the company had a total loss contingency of $40 million and a loss contingency of $100 million related to patent litigation. Mathematically, that can't happen. We know that. But what happened? How, I would look at this, and any smart XBRL company would look at this and say, I'm not that dumb. I'm not one of those people who does this, so go on and talk about that. I got better things to do. But this is very common in intelligent XBRL companies that just aren't aware. And here's how it happens. In that first, the upper part disclosure in the HTML, what happened with this company at March 31st, the prior quarter, all they had was the $40 million liability related to asbestos. So they tagged that $40 million with the tag loss contingency accrual. That's the right tag. Good job. They tagged that $40 million to that, and they're done. Okay, fine. In the second quarter now here, they also had this $100 million added to the footnote. So they wrote the first part of the footnote, then they wrote about this $100 million patent litigation. So they said, no, now we got to tag the $100 million. What are we going to do that? Okay, let's use that loss contingency accrual tag, and they did, and that's the right tag. And let's put a member on it to further explain that that's patent litigation, that combination tag. That's the right way to tag it. Good job, because that's what that $100 million is. Good, we're done tagging that number. Let's move on to some other footnote. And that's where the problem occurred, because that $40 million was sitting there as the total for the whole company. What they should have done is taken that 40, still use the loss contingency accrual tag, but create a patent, an asbestos litigation member, and hook that along with it to explain what the 40 is. And if I look at this, you can see how that can happen. Sometimes when you're tagging a new thing, it changes the tagging of an old thing, and that's just not the way logically you think. I've tagged the stuff that I previously disclosed, I'm leaving that tagging the same. But you can see here how new tagging sometimes changes old tagging. That happens a lot with business combinations, because you're talking about a combination from last quarter, now you're adding a new combination for this quarter. So watch out for that. It happens with litigation, obviously, because there's the old and the new, and now the old has to be changed. A third dimensional problem is inappropriate access extensions, and this is one that SEC did an SEC observation on. The key with, and what I mean, extensions meaning I added a unique tag specific to your company, and access meaning that tag that ends with the word access. When you're selecting these access tags, also called dimensional tags, it's rare that you're going to need to do an extension or create your own unique tag. So, I didn't say you never should create a unique tag, because I can surely find an instance where, hey, the right thing to do is create a unique tag. However, it should be very rare or infrequent. So I looked at a lot of the filings in this room to find some unique access tags, and I found some, and I'm not going to say which company that is, but FASB knows, for the most part, which disclosures are going to be in financial statements, so they've created many of those, all those tags that they see that they're aware of. A few years ago, this started brewing that this is a problem. And so at Merrill, we actually started looking at where are these extensions, and we started giving feedback to FASB saying, here's a bunch of these that are very common, you need to create a tag, and FASB did. So they've added a lot of tags over the last 2 years so that this doesn't happen anymore. However, I looked at Transocean's financials. No. Actually, I did look at Transocean's financials, and I saw some Axis extensions, and I thought for sure I was going to nail, here's some good ones that I can switch around, but they were actually very appropriate. There's some unique stuff in those financials, and I did look at other companies, just fun to pick on Transocean. But I don't know why. The key here is every company in here should, from their XBRL, extract the list of extensions of Axis elements, those ending with the word Axis, and take a look at it and say, is that really something unique? Do I really need to do this? And I think in many cases you'll say, actually I could have used maybe it's more broad and general tag, but something every company should do. Because the SEC is noticing these like crazy. The users notice them like crazy because, if you're looking for the segments of the company and for some reason that Axis tag isn't used, you can't break down segments because you're looking for that tag. Here's an example. This is a fair value reconciliation, level 3 reconciliation for beginning to ending balance. Let's take that bottom line, and there's a tag for that bottom line. Whatever the line item tag is, that works, but you need to split it into 4 parts. So let's use members for those 4 parts. That's the best use of members, is that breakdown disaggregation. Okay, so there's 4 things. Let's create a member for those 4 things. The first 3 are asset types of investments: debt securities, common stock investments, derivative assets. Those are assets. The last one is they're fair valuing their debt. So 3 of those are assets. The 4th one, what classification would you use for these 4? Think about it. They're really different classes of assets and liabilities. So let's use that. Okay, so I'm going to go forward here and I'm going to create this structure. I know you're getting good at these structures now. So the Axis is an extension. It's the asset and liability class grouping, and that doesn't exist in the US GAAP taxonomy, so I'm going to create an extension. And then I'm going to put those 4 categories, which are actually in the taxonomy, those 4 members there. Everything's good and fine. However, this is not the right way to do it, although it seems very appropriate and it must be the way I should do it. Well, those extensions are wrong. And the reason they're wrong is because in the US GAAP taxonomy, there is an asset class Axis, and separately there's a liability class Axis. So the right way to structure it is as such. We put those 2 axes in, and we put 3 of the members under one of them and 1 of the members under the second axis. Notice how I split the 4 members up into parts now? Nothing wrong with that. In fact, that's the right way to do this. That way I don't have extensions. In fact, I did this whole thing with no extensions. So you can see how logically you might think, well, I have to have an extension of an axis, but when you look a little deeper, no, you don't. That's the problem that's going on. It isn't with simple things like the segment footnote, because there's a segment axis and everybody uses it. It's more with these types of things, and especially with financial instruments. If you have those, they tend to be a little more dicey on picking the axis tag. But the SEC is noticing this, and the SEC is, I want to say, all over it. They've talked to us about this.
Hey, Luke.
Mm-hmm.
One comment, since we do see a lot of companies' filings other than the ones that we produce the work for, and then we will often have conversations with them about the kinds of issues that we're talking about, especially on the axis member combinations or extended axes. These things are, as Lou's saying, more commonplace than you would think. And then we ask the question of the filer, are you looking at your dimensional structures? And shockingly, a lot of people will say, not really. And I don't want to put anyone on the spot, but is there anyone in the audience that really doesn't, that this is sort of new to and never focused on extended axes? Don't be bashful if you are one. All right, well, that's good. A year ago, probably 2/3 of you would say, what's a dimensional structure? So that's good news.
Yeah. For every one of these errors, I've seen that kind of thing happen, and not that long ago where, like, what do you mean balance type debit or credit? I don't see that in the tag, so very relevant. With these access extensions that I'm talking about, here's some good guidance. It's infrequent, remember it's very infrequent that they need to be created. And then secondly, use the US GAAP taxonomy as a guide. Since it provides access elements that meet most every reporting need, not every reporting need, that would be a fallacy, it's most every need. There was a point where SC was going to crack down and say no access extensions. Merrill jumped in right away and said virtually impossible to do that at this time, so that's why it says most every reporting need. That's it on dimensions. If anybody has any questions on dimensions, throw it out now, or grab me later, but that's as deep as we're going into dimensions. Another common issue, values entered with the incorrect sign. This has been going on since 2009, and I can't believe it's still going. We met with a company, and they had treasury stock entered the wrong way, and this was back in late 2008. And we said it's not right, and they said, really? Yeah, it's not right. They said, others have told us that it is right to do it this way. So you can see where the churn started. The SEC observation have said that they've noted many occurrences of filers incorrectly entering negative values. And most elements are designed to be entered with a positive value. Not everyone, but most. Net income loss obviously could go either way, positive or negative. But most are positive. Examples, treasury stock. It's always shown in the HTML with brackets in the equity section because it's a debit balance. However, the tag itself is a debit balance tag, so it's telling you entered as a positive. I want to know how much treasury stock you have that's a debit balance, which would be a positive amount. Same with dividends paid. It's an outflow of cash, but that tag is a credit balance type, which on the cash flow, debits are inflows and credits are outflows. Try to explain that to an accountant, because there really aren't debits and credits on the cash flow statement, but that's how XBRL does it, is inflows are debits, outflows are credits. So dividends paid element is a credit balance type element, meaning cash is going out. So it's really asking you, tell me the amount of dividends paid, which is a cash outflow. Loss or outflow accounts is always shown as a negative, for the most part with brackets. However, it's supposed to be entered as a positive. These are things, once you get into XBRL, it's very logical and it all works, but I'll show you some problems. So guidance would be review each amount in your XBRL that has a negative value, because that's where the high-risk items are. And if it's net income loss, that's okay to have a negative. But many elements, not so. This tag is probably the biggest violator, and there's people in this room that have violated it. I checked. Deferred tax assets, liabilities, net. Well, if you net your assets and liabilities and you come up with a deferred tax liability, let's enter it in this tag as a negative, because it makes logical sense. Unfortunately, this tag is only for if it results in a deferred tax asset. Enter as a positive, so you should never be entering negative in this one. There is a separate element for if you combine the two, it ends up being a deferred tax liability. So I don't like the name of this element, but that's what it is, and that's why I think people use it for that, but probably a good one to check when you're checking all these negative amounts. I'm going to give an example here of, again, probably a practical error that occurs that isn't so logical. The logical ones are easy. Okay, so intended meaning, sales of PP&E resulted in a gain of 120 and a loss of 80 million for the years ended X and Y. Problem is, a lot of softwares will go through here and see 120 and 80, or that's what's shown to you, tag it, you go, well, the right tag is gain loss on PP&E, and so the software puts 120 in and 80 in, and whoop, that's wrong, because obviously the 80 should have been entered as a negative. You can see how this happens, and you go along your merry way thinking everything's proper. this takes a little bit of human intervention, I guess, to get this one right. What also happens in this same situation is in the prior quarter, maybe it said a 120 gain and a 70 loss or something like that. Let's say in the prior quarter, 100 million gain and a 50 million gain. So both were gains. Okay, so in that quarter you put the tag on there, you put them both in as positive, and that's correct. Now the next quarter, one of them's a loss. It's odd to have to flip the sign on something where you already had the two numbers in there as positives, and they're still showing up positives in the next quarter. So again, the logic and the human intervention needs to be there to get this right. If it were easy, and we're trying to make it easier, I'll show you some of the ways we are, but this happens. So the problem in the erroneous meaning is that you show a gain of 120 and a gain of 80, and that isn't the case. This is more common than, this is sand in the gas tank, way more common than we like. So the SEC observation is that, this is another one, but it's related, is that filers should be aware that formatting amounts with or without brackets may be controlled by negating labels. And some of you know what negating labels is, but all it says is allowance for doubtful accounts is shown on my HTML with a bracket, so the negative. If I have to enter that as a positive, that's the right way to do it. But then when it views for human readable person, it's going to look the wrong way. So there's this feature called negated label. If you hit that flag for that number, then whenever it's shown just for human readable purposes, it will change however you entered it into the XBRL. In this case, from a positive, it'll put brackets around to show a negative, which is what you want for human readable purposes. It has no effect on the value of that number in the XBRL, it's just for display. So what that then causes a problem is checking the validity of the positive, negative values. You can't do it from the rendered version of the XBRL on the SEC's website. So in the past, and even currently, but hopefully not much, people look at the rendered version of the on the SEC website, see the numbers and go, yep, that number matches. That one's a negative and it's negative in my traditional financials, I'm all good. Well, that SEC rendering only shows the human readable. It doesn't show you what's actually entered into the XBRL. So a lot of companies are reviewing from the rendered version on the SEC website, and that's really not going to help. So that's the negative signage part. We go way deeper, but these are the more practical things that occur, and basically take a look at the negative values in your files. Those are the high-risk items. Calculations is another area that just sounds easy, but I'll show you some things that do apply to the companies in this room. There's the rule. If your HTML shows two or more line items along with their net or their total, the XBRL instance must have an effective calculation relationship from the total to each of the line items. So to get everybody up to speed in 30 seconds, here is a calculation. Let's say it's current assets. Those three items add up to the fourth, so there are four elements there. If you need to look at the sign for those elements, and these are all debits, of course, so this one becomes pretty easy. If I give the first number a weighting, you have to give, I guess I'm not giving the number a weighting, I'm giving this tag a weighting. I want 1, 2, and 3 to add up to 4, so I'm going to say whatever number is given to cash, I want to take it times the weight of +1. Take it times +1. My only choices are +1 or -1 in this math calculation. All debits have to be the same. So if 1 is a +1, all the debits have to be going that way, and all the credits the other way. Makes sense? So what would I do? I would give this, and the thing on the right is what you're adding to this here, is saying +1, +1, +1, so that when the numbers come in, it takes it times the +1, and it all adds up to the fourth. That's calculations in a nutshell. Seems very easy. Well, what about this disclosure? 1, 2, and 3. Well, then there's some subtotals. In this, there's actually a calculation right there. 1, 2, 3 add up to the fourth one. There's a second calculation that needs to be done in this, which is the subtotal less the reserve adds up to the bottom number. So the point is there's two calcs here, so be careful. What about this disclosure? Yeah, there's a total of 4.8, which consists of 2.8, 2.0. The answer is yes, you need a calculation here. Just because it's in writing doesn't matter. A lot of people miss this, but you are telling the reader this plus this equals that. The SEC said we received certain submissions that contain either no calc or fewer than needed. And here's the interesting part. Well, this will not generate a validation error or a warning. These submissions are not in compliance with the EDGAR filer manual. The required calc links are useful for consumers of the data. So consumers of the data use these things to say, these are components of that. Without it, the SEC knows that it's not as ideal as need be. And the interesting part is they're not, you can't run software and go, oh, calcs are missing to any great extent. So here's, yep.
Just to add one thing, I know we've talked about that Dear CFO letter, and understand it was a random selection of customers who got it. The SEC told us about, they sent about 200 out, but there are easily, at the time of its issuance, thousands of customers that, or filers had calculations missing. And in our review, again, we see this repeatedly, that even though the guidance has been out there with the Dear CFO letter, filers are still submitting information with missing calculations. So I say this because a lot of people think, well, I didn't get a letter, I'm off the hook. No, it might mean that the SEC only selected a random group, or they did select a random group, and expected that letter to have the impact that people would pay more attention to it. So again, check after this presentation your own filings to see if any of the things that Lou's talking about, whether there's information in the text or which he's going to show now, might be embedded in your file that needs correcting.
And here's an income tax expense broken out by current deferred. And the three numbers at the bottom, look at those, okay? Let's say substitute that in the same set of financials, there's this thing, the same three numbers that's broken out by continuing and discontinuing. Do you need a calculation coming down to that 936 for the first disclosure and the second disclosure, or does one calc cover it all? The answer is you need two calculations because those are two different, completely different things that are occurring within the calculation. So two are needed. How about this one? The balance sheet has those items. The condensed consolidated in the same set of filing has same thing, but they group prepaid and other. It happens a lot. Do you need two calculations to cover that or one? And the answer is two are required because those are different things. A, B, C, D, E coming down to Z. The other one's A, B, C, D, and G coming down to E. Those are different things. So yes, and some people won't do that. They'll just say, well, one covers them both. So consider that. Here's another one. The balance sheet disclosure has this. It's just the equity section. A plus B is C. What if that same thing is in the condensed consolidated? Here's the footnote. Exactly the same numbers and the same thing. The point here is that that's a duplicate calc, and you can only put it in one place. The EDGAR filer manual says two calculations are not permitted in that situation. So something else that's just kind of weird, but consumers want it in one place and not two, and that's just the rule of the EDGAR filer manual. Here's another one. Watch out for this one. In the balance sheet, there's some things that add up to total assets, and then in the condensed consolidated, let's say for subsidiary A, same things add up, but intercompany is thrown in there to make that reconcile. So you need one calculation or two, and of course you're going to say two, but that's not the right answer. And it's just, why can't this be a little easier? Data people would look at this and go, well, the one on the left is just a subset of the one on the right. It just so happens that intercompany isn't there or it's zero. And that is the right logic to be applied to this, such that only one calc should be there, and you should put the calculation on the one on the right side and leave the calculation off the balance sheet. This is what created that Dear CFO letter for a lot of companies, is they said, well, when you do that, it actually spits out a warning. Every software will spit out a warning saying, are you sure that you don't need, if you put two calcs in, it'll say, are you sure? If you put one, it'll say, are you sure? A lot of people just strip them both out to get rid of that error warning, and that's wrong. So only one calc is permitted in this situation. The calculation is not required for the balance sheet because the total assets calc in the balance sheet can be accurately computed from the calc in the footnote. And that's just weird until you really think through it. So it's created a lot of problems for filings. Here's my last calculation example, and it applies to many, many companies. Long-term debt less current portion equals non-current portion. This one sounds really easy. If you take a look at those, the common error is the total plus current equals non-current, and we know that's not right. Well, why did that happen? If you look at this, there's 3 elements for those items that are all credit balance types, obviously. So what happens is you put a +1 weight in the first one. Since the next one is also a credit, you need to put a +1 in there. You have to keep them the same. And that's where the problem occurs. +1 doesn't work because you did what that company did to create the error. So let's put a -1. That'll solve this. -1 credit. Then you have to put a -1 for the second item. And that equals a -11.5. That's not the right answer either. So it's impossible to do. What companies will do is say, that's the case, and I'm getting this stupid error warning, I'm going to strip out that calculation. When you do that, guess what? It works. You don't get a calc error, and you're good to go. Not so. That's still wrong. And so what is the fix to this? And the answer is to work from the bottom and go upward. So you put the 8,500, give that a +1, which means you have to have the 1,500 +1 because they're both credits, and therefore that's how to do it to solve this. And all calculations are is the mathematical relationships of the elements. So it works to say those two equal the top one, but it's not logical. And so many companies get this wrong. This also happens on the bottom of the income statement with parent plus non-controlling when you're trying to break out the net income by parent and non-controlling interest. So also on the schedule, it shows amortized cost of security over to the fair value with unrealized gains and losses. Same thing. It's a backwards calculation. That's what we call it, Carl, is backwards calculation. So keep that in mind. It's very, very common error that the SEC has noticed, and the SEC says that calculations are important to users. Tagging completeness is the next one, and the last of the examples of errors I'm going to show. For this one, information in the XBRL should not be more or less than the information in the HTML. Sounds easy. Here's a real long disclosure. There's 3 numbers in there that need to be tagged, but many companies will take this and say, I'm going to tag this as a block of text, and therefore I tag the numbers. The SEC says, no, you have to tag the specific numbers. So in this case, those should be tagged individually. And the 2.2 to 1, that's one tag. It gets tagged as the value 2.2, just so you're aware of that. We already talked about this when there were no impairment losses. There were 0 impairment losses, so yes, I better tag that as 0. In fact, there's 3 numbers to tag there, 0, 0, and 0, because there's 3 different context dates. How about the following? Alphanumeric such as 1, 2, or 3? The answer is yes. Just because you spell out the number doesn't mean you shouldn't tag it. Ratios such as 1 to 5 or 4 to 1, yes. And the 1 to 5, you know what value would be tagged there? 0.2 is the value. You don't tag 1 or 5, you tag 0.2. I mean, that's the value that gets entered. Decimals such as 0.2 or 4, yes. Tag those. 1, spelled out 1, MILION, yes, tag those numbers. They can be tagged with a string type element if you want, but they have to be tagged separately as amounts. Numbers in superscript text, yes. Numbers in parenthetical disclosures, yes, tag them. Proper nouns, street addresses, lawsuit, case number, no. You do not have to tag proper nouns just because they have a number in them. Sales of 1% fat milk, this was an example the SEC gave saying no, it's a product, don't tag 1%. It's really got no financial or any value other than it's a product. Founded a new subsidiary in 2009, the answer would be no, that 2009 is just a year or date. Number of reportable segments, maybe there's 3 reportable segments. The answer to that is yes, because it actually was a tag in the US GAAP taxonomy before that, so yes, that needs to be tagged. Should a dash be tagged? it was a question for a long time. Finally, the SEC came out and said, a filer may simply not tag the element for the line that it's appearing as an empty field or a dash. So no, you don't have to. They did go further to say, if the filer wants to tag those with a zero value, because that's what management believes the item represents, and they think the distinction is useful, they can choose to do so. So you can tag a dash with a zero. Most people do not, because maybe it's just immaterial, it's actually not zero, but it's up to management. Commitments and contingencies is another one that causes confusion, and it should be tagged with tag commitment contingencies, but the value to be tagged is really nil. There's an option to say not zero or not a number, nil. So that your filing manual states that and says that it's defined as neither zero nor an actual value. Something to keep in mind if you have that on your balance sheet. That's all the errors I'm going to go through. But there's this thing that's so key to everybody in this room called the XBRL US Data Quality Committee. It's a committee, this thing started in 2009 with the SEC. The industry people have never talked to each other across firms much. This is the first time we brought together service providers, we brought together users, academia, industry groups to say, let's all talk and figure out the right way to do this and put out some rules and guidance. This just started within the last year. It's something that's going to affect all of you pretty significantly because the group is creating rules and guidance for how to properly file XBRL. Previously, XBRL was doing this. They had the XBRL Consistency Suite checks, a bunch of rules. They did cost money, which became problematic. Why spend money for that? They had a lot of false positives in them, which can be okay. They're warnings, but going through warnings all day tends to be a, takes a lot of time. So this group said, let's create these things, and guess what? We'll give them to the filers free. They can. Who wouldn't do this? Here's some rules coming from an industry group that the SEC is actually tracking and monitoring. They're for free, and they help you file a better quality XBRL filing. I mean, you have to be, not knowledgeable of them and understanding them to not run them, okay? Now, these rules, the first set of rules did come out on January 1st of 2016. They're effective. Here they are. They went through a comment period. They're solid. I don't know how many of you ran them. I did check a lot of your filings to see if you had these errors, because if you had them, obviously that means you didn't run them or weren't aware of them. The group here did pretty good. So I think some of you are running them. More than half of you are running the rules. There are some of you that aren't. So you may not know if you're one of them or not, but check with whoever's running your XBRL. And for those of you who don't, please get on it for your own sake, not mine. Although I am passionate about getting these things fixed. So this group, the Center for Data Quality, which started with XBRL US, but it's an industry consortium. It includes service providers, consumers of the data. The AICPA is a member, XBRL US, FASB is an observer. The CFA Institute is a member, which is pretty awesome, in my opinion. It's big. Whenever you get these solid people, joining a group like this, I think it's very, very. It's not some group sitting in the corner doing things that aren't going to matter. These things matter. So the committee will produce automated XBRL rules for a company to use free of charge. So the SEC, if they didn't care about this, the group, we'd say forget it. But the SEC is monitoring this, and we're actually meeting with them. We have face-to-face meetings every about 4 months. After the meeting, then we go meet with the SEC for 2 hours. So they're actually tracking what we're doing, and we're tracking what they're doing about it as well. So this rule set number 1 was out for, it's been out for more than a quarter now. So we said, okay, when March filings came in, let's track last quarter of, would be 2015, the first quarter of 2015 to the first quarter of 2016, and see, did these rules even make a difference? And here's what it looked like. There was really a 64% decrease in the errors, which I think is very good. I mean, it's up for opinion, but for every 1,000 facts that are filed, these rules caught 3.2 roughly errors in 2015. And if you go to the far right, in the most current quarter, they caught 1.2 errors per 1,000 facts. So for the rules and the problems that these errors can check, there's obviously a big improvement, meaning companies are using these rules and they are seeing the errors and correcting them. I want that thing on the right to be 0, and I was a little surprised it wasn't close to 0, but it means some people aren't aware or aren't running these rules. Very key to run them. Some service providers have done a quality certification with Expert to say your tool, your software does run these rules within it and produces the right answer. So Merrill obviously is in that group. We're very involved, but they're key. We'll keep doing this graph, the group. And I say I'm on the data quality committee. We'll keep running this graph, and the goal is to get it down to 0. But it takes awareness of these rules.
Who are the members of the data quality committee?
The members of the data quality committee, the founders of the center were 3 service providers, Merrill, Workiva, and Vintage. Those are the 3 founding members. After that, on the data committee, there's those 3, plus now we've added, as I said, the FASB, they're an observer, CFA Institute, XBRL US, and the AICPA, and then there are 4 users. So Bloomberg is on this group, and they're very active. And if that doesn't tell you something as well, Bloomberg is sitting there telling us we need to be done this way, we need to be done that way. Credit Suisse is on there as well as a user. CalPench is another user on there, and then S&P Capital IQ is another user. So talk about big names. I think we got them all. For starters, there's R. Donnelly is one of the service providers that is not on there. They started, but then they ditched out. They, for some reason, said it wasn't fitting them, and RDG is another user that isn't on it. When they left, then DataTrax came in. They're a company that does XBRL. So that's who's on there.
Can you comment on what the rules as you evolve won't be able to check on?
Yeah. Mike said, what rules won't it check on? And unfortunately, it's bigger than I'd like to say. It's, if here's the population of errors in total, this first set of rules probably catches, some little spot down there, 5% or less, unfortunately. We're having a second set of rules come out, and that will increase that population, but still not that much. I think if you took all the rules that we can get out over a period of a year, 2 or 3, it's still probably less than half. And I hate to say that, but it's just the fact. There's a lot of things that take human involvement within the, tagging. There's so many things that automation can't check, and we'll continually to figure out ways to have automation check, but it still takes human involvement, no doubt about that, which is unfortunate for getting quality right, because I want 0 errors someday. In this first set of rules, the big thing was positive and negative values. The first set of rules had 6 rules. The only one that really had significance is don't enter this amount as a negative amount. It's incorrect. There's 2,300 items, tags, that we identified to say never enter a negative in this tag. So those are built into that one rule. There's 2,300 sub-rules. And that's what on that graph previously, the green part is that positive and negative rules. That was the big chunk. So here's an example. If purchase of mortgage loans, that should only be entered as a positive. If you enter it as a negative, because it's shown as a negative, you would get, well, here's the element, payments to acquire mortgage notes receivable. It's the cash outflow, so enter it as a positive. But if you enter it as a negative, you'd get this comeback if you ran the rules. That element has a value of minus 1.2, which is less than 0. The element should not have a negative value. We tried to write these to be very simple, so everybody can understand that, and that one's extremely understandable. And then it also tells you properties about that, what time period you're talking about. Everything's good. Okay, here's the problem. Let's say that far right-hand column is what I just showed you, but in the condensed consolidated, there's some pieces and parts to those numbers. So take that first line. There's the 1,200, we know that's a positive, should be entered as a positive. The 500 and the 800 on that first line also should be entered as a positive. So that 100, what should you do with that? The right answer is it should be entered as a negative. okay, I just blew the rule. I just made that rule and now I just screwed it up, because that is the right way to do it. So we went into the rule and tweaked these rules to say, however, if the members, such as parent member, subsidiary member, or eliminations member, are attached to that tag, don't apply the rule. The person's okay. Don't throw out an error message. So the depth we've gone to get these types of things right is pretty extreme. And what I want to say is these rules are solid, and I'll stick by that. If you blow an error in one of these rules, an error is flagged, you better change something. So we've told that to the SEC, and the SEC was like, oh, we got something here. And it's not just the SEC. I hope the SEC takes these and puts them in their rendering validation engine, because why wouldn't they? Forget about the SEC, what about the public? Thing is, public can now see errors that are definitive errors, and there's going to be the embarrassment factor of those who don't run these rules and correct things. Because I can do a website today, and I'm thinking about who, youpickthabadtag.com. You can't take that one now, I got it. And just show, here's all the errors that people, how silly is this? For free, they could have fixed all these. I'm not going to do that, but I wouldn't doubt someone else will. It's one of those things that it's out in the public. It gets back to, here's my financial statements and here's my financial statements. The XBRL better be the same and better be correct, because it's becoming very easy now to find out where those errors are. Very, very, very easy. So that was rule set number 1. Rule set number 2 is coming. We're going to have a public commentary period in a couple of weeks, hopefully, when they come out. And the big rule in there is invalid access and member combination. So we've taken all the things where we say this one can never go with that one. Here's an error message. And I think it's very beneficial to filers to have that, because you do have these errors, and now we'll show you some of them. There's still a lot, like Mike said, that the access combination is wrong in your filing, but automation can't check that. Too bad, those will always exist. There's also some guidance that is key to everybody in here, so you'll hear a lot more about this one, to say we want to reduce the number of extensions. That's just a goal that the users, Bloomberg has said that, S&P has said that. How do you do that? Well, let's figure out how to reduce extensions. We're putting out, that moved into element selection guidance, and we're putting out some guidance that says here's how to select an element which will reduce extensions. Example, in a filing it says research and development and other related expenses. Question is, should you tag that to R&D or create an extension because there's other stuff in it? It's a debate, and the committee is coming up to say, that disclosure is there because there's a requirement to disclose R&D, so use the R&D tag. And you can't put two material things together without breaking them out separately, and this company did not break these two out separately. So R&D is the material portion, and the other is immaterial. So use the same guidance for materiality in the HTML financials as you do when you're selecting a tag. So the movement is just tag that to R&D. That's what it is. The other stuff's immaterial. And the accounting disclosure requirement is you got to disclose R&D. So I know that applies to a lot more things than R&D, and it will reduce extensions. And believe me, users take that number, and after a while they can't consume it, they end up flipping it over to R&D anyway. Another example, let's say in your current assets you have deposits, prepaid expenses, and deferred revenue. There's a tag for each of those three individually, but not combined, so which one should you use? If deposits is the material item, the other two are immaterial, use deposits. If all three of those are immaterial, use other current assets. That's where the guidance is going. I'm giving you a pre-look into what's going to be there. But it will affect the way we tag pretty much every company. And then, you heard it from me first, or probably. The XBRL International has a task force for entity-specific disclosures, meaning extensions, how to better give them meaning. So here's what's going to happen, and I can see this coming. And I'm on this task force. You have an extension, and it's a appropriate extension. users can't really consume that. It's an extension. It's like, it doesn't make sense. What if you took that extension and connected it or anchored it somehow to a US GAAP tag? Maybe it's a sibling to this tag, or it's very similar. Maybe it's the parent of that tag, maybe it's a child of this tag. What if you could do that and give it more meaning? Then a user could come through and say, oh, extension, but at least I know it's a parent of this or a child of that, or it's very similar to R&D or something like that. That's there's huge movement coming with it. It's going to happen. The SEC will have to change every filer manual to say, you have to do this for any extension, but standing way back, it completely makes sense. So get ready for that. I don't know how far off that is, but I think it has a head of steam that I think it will occur, and it makes so much sense. So that's what's happening with the Data Quality Committee. If you're into XBRL, keep tuned with what they're doing, because everything the committee does affects filings and filers. Managing the XBRL process. Here's the killer: converting to a new US GAAP taxonomy, new version. So many errors in financials now are because of this. It's unfortunate. I'll just say it this way: the right way to do it, identify the changes, and really they're in categories of deprecated elements, definition changes, new elements for those reasons, and modeling changes within the taxonomy. Those are the 4 categories that change. Identify what changed and figure out what applies to you. It sounds so easy. I'll break it down into parts: changes that are automated and changes that aren't. Most anybody can automate. There's a deprecated element, which I was using. It's now been deprecated, so quit using it. That's simple. Definition changes. You can always get a list of here all the definition changes. Which ones apply to you takes human intervention, but those are significant. Changes that require human review: if there's a new element in the taxonomy, you're using an extension today, you should change over to the new one. You do have to run a list of the new ones and see which ones apply to you. There's a new one: long-term debt and capital lease obligations, including current maturities. Who would think that's a new one? But there's a lot of extensions for that now need to be changed over. And then something else that takes human review is modeling changes. The segment footnote modeling was changed a few years ago, and a lot of people did not update anything for it, which means they're now doing it wrong. So the fallacy is, I have a software that I use that converts the taxonomy for me. I push F5 and it all works. Yeah, right. There's just no way you can convert to the new version of the taxonomy without some human intervention. So part of XBRL. The XBRL preparation process: outsourced, in-source, meaning are you using a service provider, are you not? Initially on the left side is where everybody started in 2009. I bet 95% or more were on the left side. With disclosure management software and better things available and intelligence around the community of preparers, it's moving to the right. And what I mean by outsourcing is the extreme situation on the left side: a company relies solely on external expertise. On the right side, companies using their own internal staff and resources to map, tag, and review. And then in the middle of what I made up the word hybridizers, they apply a combination of those two. So point here is, I'm going to show you another slide. For this slide, I want you to decide, just eyeball where you're at on that scale. There is no right spot. Obviously, it's whatever your company is, but where are you at? Okay, keep that in mind as we go to the next slide. This is attributes of where you probably should be at based on these attributes, and see if you identify any of the attributes in your company. Extreme on the left side: the in-house team knows XBRL well enough just to judge if the output matches traditional financial statements. In other words, someone can give them the output. Here it's been tagged and they can tell. But they can't spend the time and the resources on XBRL beyond what's needed to review it. So that's, if you're those, you probably should be on the left side. On the right side, the in-house team deeply understands your filer manual and basically those 7 components of quality. If you deeply understand those, you're good being way to the right side. And the team stays updated, which is key to changes. And they have a transition plan in case the expert leaves. So Mike and I know many cases where someone gives a call and says, our XBRL person, the only person that knew it all left. Can you help us this quarter? We've got a month left and we need a lot of help. Sure we do, and we get it all filed. Many of those companies have moved back to the left a little more than they were, realizing that that's a serious problem. And quite often there is one person in a company that can do it, and hopefully they don't leave, or the transition plan is key to being good far to the right side. So then there's those in the middle. The in-house team has some knowledge needed to prepare XBRL, but they're able to see which challenges are beyond their expertise. The 7 components, they'd look down and say, got it, don't have it, so I need a little help, and so forth. And that is the key to knowing whether you're getting it right or not. And the team can ask the right questions, but they need help with technical execution. Okay, so given this, are you in sync with the prior slide? Remember, here's where you were on the prior slide. How does that sync up with these attributes based on where your company's at? If you're in sync, stay there, but be careful because the environment does change. If you're not in sync, watch out. There's errors occurring. I'm almost certain of it because you don't know quite often what you don't know. 30 seconds on Merrill. On that left side, the outsourcer, we have just a phenomenal team. 75 CPAs sitting in Minneapolis, St. Paul, which is where I live and work, working on XBRL daily. 17 years of accounting experience. So these are seasoned people who understand XBRL deeply and know those 7 things. Knock the cover off the ball, fun to work with. That's where I get a lot of my enjoyment. On the right side, of course, there's many companies with outsourced software that helps you tag and do and collaborate on your financials. Merrill has Merrill Bridge that does that. What's very interesting about Merrill is you bring those two together, the outsourced team on the left with that software. We have a very, very, very unique product that I'm really proud of because you get the software and you get the smarts to do it right. So, my 30 seconds are up. It's something that is something to be very aware of with how you're doing the XBRL. Last topic I have is forward-looking XBRL. What's coming in the future? What's your boss going to ask you in the next 4 to 6 months that you need an answer to? Fortunately, I'm going to give you the answer, and you're going to say, yeah, I'm glad I went to that seminar because now I look smart in front of my boss. The first thing is inline XBRL. On Monday, the SEC put out an announcement saying that we are allowing companies to file in the inline XBRL format on a voluntary basis, whoever wants to. And they're going to run this program through March of 2020. So they're giving it about 4 years to say, try this if you want. They want to get some companies to do it so they can look at it and go, oh, we need to tweak the program, or it's working or not working. What is inline XBRL? Today you file, and this is the thing your boss is going to ask you, okay, so get ready. On the left side is your traditional HTML file that you hand in. On the right side is the XML, the INSYS document file. It's one of the 6 XBRL files that you file. What's really weird is, why are we handing in 2 documents? Here's my financials and here's my financials. Wouldn't it be smarter if there was one? So what XBRL does is, let's change that so that it is one document that you hand in. And it's called an .xhtml, which I think is a very, very appropriate extension. It's the combination of XBRL and HTML. So smart.
Is it an Axis extension?
No, it's not an Axis extension. But the fun part of this is that's the end of the traditional financial statements as we know it. The traditional financials, here's my HTML, is done. It's over. However, from that bottom file, if you say, I'm not an XBRL person, I just want my traditional HTML financials, you can extract that from that file, which makes it very usable and doable. If you're an XBRL consumer, you're going to say, I don't want that HTML. You can extract just the XBRL tags from that bottom file and use them appropriately as well. So that's why this works and everybody's still happy. But it's a key thing that's changing. I don't know that a lot of companies are going to jump on the bandwagon right away because it is a little bit more work to, you got to prepare the same stuff you normally would plus this inline XBRL file. But we'll see where it goes. And it was truly Monday of this week that got announced. And the SEC was talking about it for a long time. We'll see where it goes. I think by 2020, it very well could be that this is now not a voluntary program, but a mandatory program. And I am going to say, 4 months from now, your boss is going to ask you about XBRL or inline XBRL, and you're going to say, darn, I remember that word, but I have no idea what he was talking about anymore, because 4 months have passed. So here's the way to remember what it is. In the traditional HTML file, there's angle brackets, and it says font size 6, Helvetica, depreciation expenses 200 million, and so forth, another angle bracket. That's called a line of code, okay? That's the technical term. The HTML, what it does, it says, let's keep that same line of code, and right by the 200, let's put the XBRL tag stuff in there. So the tag is depreciation expense, it's a debit, it's for the period whatever to whatever, and so forth. What you've done is you've put XBRL in that line of code. So that's where they get the word inline XBRL. So that's the easy way to remember it. You're putting XBRL just right in that same line that already existed. And that's the beauty of it. You got both things sitting right there in one file now. Just telling you. 4 months from now, you're going to appreciate that I told you that, because that's the only way I could remember it as well. Inline XBRL is bringing XBRL in the line that was already sitting there in the HTML. Other issues that are impacting registrants that you need to know about. Will there be more tagging of information? And Mike already said, yes, there will be, and he's exactly right. Proxy statements, we know about the proposed requirement for the pay versus performance rule. This is a table that is being proposed, and it's got different numbers in there. Well, guess what? That's what is going to be tagged. Every number in there needs to be individually tagged, as well as 3 block text tags. Those 3 things that are blue bullets here need to be tagged as well as block text. This is not complex XBRL. I mean, this is rather simple. There's numbers in there, but you can see this is every company's going to have the same things, the same table, the same disclosures, and plus it's real, so it's conducive to tagging, plus it's real interesting data to consume. We're talking about executive comps, everybody's interested in it. So you can see why this one's hot on the list for, probably will get passed as XBRL. Interestingly, it's easy, however, it isn't the financial group that's, your group that's actually producing these for the most part. So whatever group in your company produces this is going to go XBRL, and they're going to look to you for help. So that's where this does apply, even though it may not be something that you're producing in the proxy today. Earnings release. Don't worry, there's nothing coming down the line, but it's hot on the list because analysts have said, I don't change my buy sell hold based on your 10Q. I do it on that earnings release that comes out earlier. And therefore, they'd love to have that tagged. Someday, I wouldn't worry about it today. MD&A, there is a taxonomy at the SEC for tagging MD&A. It was produced a number of years ago when they were really thinking about it, but they're cooled off on it now. Data between all of your companies is so different in the MD that there wouldn't be much comparability, so I get that. The tags, however, are quite text block taggy type tags. And that means, liquidity risk, put that here. So that kind of makes a little sense, but again, do not think this is coming soon. It's a ways off. Corporate actions, similarly, far away. And then, what about the audit requirements? There's nothing hot on the table. CPA firms have talked about it. They probably don't have enough resources right now to tackle it. But the key part of this is that XBRL, inline XBRL document I just showed you. There were 2, upper right, upper left. The one down on the bottom is the combined file. Now the auditors have a problem, and they're well aware of this. The auditors say, we audited that file. It used to be that upper left HTML file. Everything's good. Now they're going to say, we audited this file, the bottom one, which has we audited that one, but we didn't audit certain parts of it, these tags, so we didn't audit that or that or that or this, but we did audit, how are they going to explain what they did and didn't do and take liability for what they've done and not done, because there's no audit requirement for the XBRL. So this isn't a small problem. The firms, the ACP is well aware of it, and they're talking about it, but it's brought up another conflict in the external reporting world. So we'll have to see how that plays out. There was talk about changing the audit opinion for it about a year ago, but I think that's cooled off. We'll see where that goes. Rather than opening up for questions right now, I'll be here for quite some time and therefore stop to talk to Mike or I. And that's all I have, so I think I'll turn it back to Joey Baines.
Good. Thanks. Thank you, Lou. Appreciate it. Please join us in the back for a cocktail, glass of wine. Again, really appreciate everybody coming. Great event, and we'll grab a drink in the back now. Thanks again for coming.